Okay, traders, now that you have your trading edge defined, it's very important to take that edge and put it into a mechanical system. Now, my argument for this is very, very simple. If you want consistent profitability at the end of the day, think about it this way. How on earth are you going to have consistent profitability as a trader if every time you come to the market, you're trading differently based on how you feel, you're taking setups that, that are different to the setups you took yesterday, are going to be different to the setups you take tomorrow, and you don't even have an edge that you're executing on, and you don't have a structure or a process guiding your decision making. How on earth do you expect consistent profitability that way? So my argument's very, very simple. Day one, you define an edge. You get clear on what your trading strategy and edge looks like. Day two, you now take each of these individual components of your edge and you put it into a mechanical trading plan and you structure it into a process so that every time you come to the market, you have a checklist, you have a process that you can execute on. And it's as simple as that. There's a reason why the highest performers, surgeons, doctors, pilots, they use checklists, they have processes, they have standard operating procedures. And the reason why is because they know in an overwhelming situation, such as trading, in a high pressure environment like trading is, they need a process, a checklist to guide them to making rational and proven and data-driven decisions. So what we're going to be talking about in day two of the Trading Psychology Mastery series is helping you create a mechanical trading plan. And a lot of your emotions will be addressed by putting a mechanical trading plan in place. And then when we have that, then we can go start talking about the nitty-gritty details of your psychology and managing those components so that you can stick to this trading plan, to this edge. Okay, now remember, one thing I ask of you, if you enjoy these videos, if you enjoy the Trading Psychology series, copy the link, the playlist link that's in the description below, and share it with your trading communities. The other thing is we've launched the Trading Psychology Archetype Quiz, which is going to tell you which trading mindset you have and give you a free personalized plan to help you get to consistent profitability. You might want to check that out and do that quiz. It's been incredibly beneficial to the traders who've already been through it. Okay, let's get into it. Now, if you fail to plan, you're in a sense planning to fail. So what we're going to be discussing today is all about your structure and putting a game plan together and having a process or a plan that you can adhere to. Because in order to have consistent profitability, consistent money coming into your pocket, you need to have some sort of consistent action. And that specific consistent action is the consistent execution of your trading plan and your trading edge. Okay? So don't expect consistent profitability unless you have an edge that's put into a mechanical trading plan and you consistently execute on that trading plan. I don't understand why that isn't simple logic to so many traders, but most traders do not end up having a mechanical trading plan, right? And we're going to address the argument later about discretion and trading based on intuition, which for a lot of traders is actually a false NOMA, and they're not actually trading on intuition. We're going to address all of that, and we're going to talk about quite a bit of stuff in this lecture. If you already have a trading plan, by the way, you're also going to learn some things from this that you probably haven't implemented already. So let's get into it. I want you to think of your trading plan as a funnel, okay? So based on yesterday's video, your trading edge, what you've gone off and done is you have done an enormous amount of testing in a sample space of data in the markets, previous back-tested data, and what you're going to do is you're going to filter that information down based on your edge, and you need to have a process that allows you to organize that information to allow you to replicate that in the future. So when I gave you that little drawing yesterday about, this is back-tested data, and then your job as a trader is to execute based on what you find your edge is, the factors that lead to your edge into real-life data. The gap between that, the way you do that is through a mechanical trading plan, by defining your factors and putting them into a mechanical system. So when you go and find your previous back-tested data and the sample space of that, you're going to have a lot of data, and it becomes a good practice to filter that down and get very good at that. So I want you to think of it in terms of a funnel. The first thing you're doing is you're learning far and wide. You're maybe learning from different educators or mentors, or maybe you have a strategy that you know works well, and you go and test that for yourself. One thing I didn't mention in yesterday's video is never take someone else's word for it. At the end of the day, you're faced to, the mercy of the market. At the end of the day, the market's going to tell you whether you're profitable or not. So only ever make decisions based on data that you've got yourself from the market. Don't take anybody else's word for it. So you're going to learn far and wide, and you're going to do your testing, and you're going to figure out what those factors are that lead to your edge, everything we discussed yesterday. And then what you want to do is you want to filter that information down into what you're probably going to have first and foremost is more of a trading playbook. This is more of a general idea of entries, managements, exits, risk management. And this is really what you're trying to find. You're trying to find the best entries, you're trying to find the best way to manage your position, the best risk management, etc. Now, this trading playbook may not necessarily be profitable because it's still quite broad. You're just taking all the information you've gathered and you've put it into just this really big playbook of information, and it's just kind of sitting there. You've organized into entry management, risk management, but it's kind of just a lot of information that may not be profitable if you traded it. So then you want to take that one step further, and you want to take each of the components in the trading playbook that, if put together, yield consistent profitability, have an edge. Remember, we discussed those components and those factors yesterday: entry, specifically area of value, then your entry criteria, and then from your management perspective, where you put your stop loss initially. These are all components that you need to put together. Okay, so this is number three. Number three is what we're going to do is we're going to create a trading plan. Now, you may have more than one trading plan. You may have multiple setups that you trade. All of them go into your trading playbook, but then each individual trading plan has to be profitable. Each of the trading plans you have to be profitable. Okay? And then I don't want you to stop there. I want you to take it one step further, and I want you to put together a checklist as well. All right? A trading checklist. And I'm going to show you what this looks like in the preceding parts of this lecture. So we're going to break down each of these components. We've already talked about this. Your trading playbook is we'll discuss, but it's quite easy. Your trading plan is also quite easy. It just has to be profitable. The checklist is very easy as well. Nothing here is difficult to do. It's just about taking the time to do it, to ensure that you have a structure and a mechanical system. All right. Now, one thing I want to say is something that I have found personally through my trading journey and through my studies of psychology and human behavior, and also working now with many traders one-on-one and having many traders come through the 12-week program, is that the better your trading plan is, and the more simple your trading plan is, and the better your strategy is, and you've organized that in a very mechanical way so that you have a mechanical system, the better your mindset is. So the more you create a rock solid trading plan that guides you in the market, the better your mindset's going to be. Whereas what I've also found is that traders that have a very overwhelming system, they haven't organized it properly, and they're overwhelmed in the markets, their mindsets are riddled with emotion and fear and greed in the market. And there's a correlation here between having a mechanical trading plan and having a good mindset, which we're going to explore more throughout the series. But this is a very important step. Okay, so I want to run through these components and give you a bit of a template. And then I also want to address a few additional things which I believe will be useful. But let's run through that trading plan template. What are the specific things you need to make sure you have in your trading plan? And by the way, you can create this in Notion. You can put this on a piece of paper, whatever it may be. I encourage you to have it on a Notion document because chances are you're going to update it. So the first thing, like we've mentioned, is you need an entry. You need an area of value, and you need an entry criteria. The area of value tends to be on the higher time frame. You need to specify what time frame that is. And you need to specify the details. And then entry criteria, you need to also specify the criteria. Now, the way I want you to think about it when you're creating your trading plan is you need to be able to tell a robot or an algo or a computer, this is exactly what I look for, where, how, and you need to get that granular and that specific with the details. So imagine you're trying to code an algo or just tell an algo or a computer what to look for, that's what you want to put in your trading plan. It needs to be that specific. Okay. Now for the area of value, you want to have a clear rule of what that looks like. For example, a clear rule may be on the daily chart, you look for a candlestick rejection in an area of support or an area of resistance, or whatever it may be. Okay, that's a specific rule that if you saw that in the market, that would pique your interest and you can look for that. Okay, so you need a clear rule. You also want to have it in checklist form to keep it simple. Don't make it wordy. Don't make it overwhelming. You need to have something you can refer to quite quickly. And then lastly, you want to put a simple image. Trading very much is a game of visual recognition. So the more you have that image there of a clear picture in your mind, the easier it is going to be to spot in the market. So a simple pic as well, a simple image. Okay, and then let's say, for example, you look for that on the daily, and then, all right, when that is present in the market, I then go down to the lower time frame. You want to specify what that lower time frame is, and then what other specific criteria you look for, the entry criteria to then get into the market. This is what else you want to have in your trading plan. Again, you want to have clear rules, make it checklist form, and put a simple image in there to train your visual recognition. You want to make this all simple. You don't want to be overwhelming yourself in the market. You want to do the same for your management. Right? Where do you initially put your stop loss? And then do you have a break-even rule? If so, you want to clarify each of these things in there. What's the clear rule? What's the checklist? What's the simple image? You want to put that all into your trading plan. And then do you actively manage the position, or do you set take profits? And then you want to cover the same thing for your risk management. What are the rules, risk management rules you have? Maybe you have a daily loss limit. Maybe you have a drawdown buffer that you trail or reduce your risk. What are the specific risk management rules you have? Create clear rules that are simple in checklist form with a simple pick. Clear rules, checklist with a simple image. So you can train that pattern recognition in your mind. And you want to have that for every component of your trading plan. Now, by the way you structure your trading plan is exactly how you structure your trading playbook. Your trading playbook, if I look at my trading playbook, it has all the entry criteria I've learned. It has all the management styles I've learned. It has all these experimental ideas that I've seen in the market that I want to test a little bit more. And I just put all of it in there. I know each of those components won't be profitable, so I may have 10 entries in my trading playbook that are yet to be explored, right? I may have a few different management styles that, may be useful depending on different market conditions. I have a few different risk management ideas that are very useful that I may implement into my trading at some time if I do more testing on those components. That's what goes in my trading playbook. But what then goes in my trading plan are those specific entries, managements, and risk managements that I know are going to be profitable. Okay? And then you want to create your trading plan like this using a template, online in your Notion, whatever it may be. Okay? You want to make it simple, something that can guide you in the market. Think of it as like a map, something that's guiding you through the market. And when we start to talk about the human psychology in the brain, and we talk about the difference between the prefrontal cortex and the amygdala, you'll see why it's so important to have a very simple process that guides you, that helps you quiet down and manage the amygdala and doesn't activate the emotional part of your brain and puts the prefrontal cortex in charge. This is, everything I'm sharing now is for a very particular reason. Now, after you get your trading playbook together, maybe you have a few different entries, maybe you don't, maybe you're just starting out and you have one entry, that becomes your trading plan, great. You then want to, remember the funnel analogy, you then want to really funnel it down into just something that's very simple. So the last little thing I encourage you to create here is your checklist. And this is what you bring into the market. And really it's going to look like a very stripped down, simple version of your trading plan without any images. And it's just going to be a step-by-step of each of the components. And maybe the first 3 are the area of value on the daily. The next 3 are the entry criteria on the hourly. And then the next ones are the management when you're in the position. And really the way you want to write this is in more like commands. Very simple, like is, not even is, just write down candlestick rejection of resistance or support, right? Because both for long and shorts on the daily. So that when you see that on the daily, great, there's a candlestick rejection of support and resistance. And again, it may be slightly more specific than I'm just giving an example. And then only you move on to the next one if that one above is ticked. And then what's the next thing you look for? Okay, maybe there's a reversal pattern on the 4 hour. And this is what you look for. All right, if that's present, I then go to the next thing, right? And maybe there has to be a lower high and a lower low on the 4 hour, whatever it is. That's another entry, another criteria that goes towards your entry. And then if those things are present, then I look for the entry on the lower time frame to then dictate whether I go into that position or not. And then where do I put, and then the command, what's the next thing? Put stop loss above, below, high, low. Okay, so very specific rules. So again, we're taking our trading playbook, or we're taking our enormous amount of back-tested data, putting it into a trading playbook, then putting it into a trading plan, and put it into simple commands that we can follow when we're trading in the market into a checklist form. Very, very important for the psychology, very, very important for making quick, rational decisions. And by the way, the more specific this is, the more specific your entry criteria is, the less emotion you're going to have, because the less decisions you're going to have to make in the market. For example, if I make this first one very, very broad, then you're going to and ah in the market. Has that met my criteria? Has that not? Whether if it's very specific and you know exactly what you're looking for, you're going to be more sharp, and you're going to be making rational decisions in the moment, and you're going to make better decisions. You're going to have less emotions, and you're going to build consistent profitability. Okay. So this is how I encourage, and this is how I teach my six-figure traders to build their trading plans and how to ensure that they're approximating their edge in real-life data. Okay, so let's backtrack to this very, very simple principle. The consistent money as a trader comes from the consistent execution of your trading plan, of your edge. Now that we've taken your edge, that you've tested and you're certain you're profitable with that edge, and we've organized it into a trading plan and then dissected that into a trading checklist, now your job as a trader becomes sticking to that trading checklist and consistently adhering to that checklist. Okay? Now that you have your edge in your trading plan, it becomes a game of sticking to your edge and trading plan. And this is where mindset becomes crucial. It becomes imperative to understand your human psychology and your mindset as a trader in order to manage and mitigate all the things that are going to take you away from your edge and your trading plan so that you can build consistent profitability. Now that we've taken care of the tip of the iceberg, the 10%, now we have to turn our focus to the other 90%, which is all about mindset. And this is where I get to let loose a little bit and share some really, really cool ideas that I have learned, I have developed myself, and I have been sharing with my students, with my clients for quite a while now. And this is what I absolutely love to talk about. So can't wait to get into tomorrow when we start exploring the human psychology and how we can manage it to ensure that you make more money as a trader. Okay, if you found this video useful, please share the Trading Psychology series playlist, which is in the description, with your trading community. And if you haven't already taken the Trading Psychology Archetype quiz, make sure you do that right now. And I look forward to seeing you all tomorrow.